All right, first things first, I decided when the first midterm is going to be. That's the Wednesday before we have the fall break. I don't like doing exams after breaks, even if it's a short break. It's going to cover chapters 5, 7, and 11, and we covered those three anyway. And 12, we're going to cover this week, and 14 next week. All right. This chapter is also kind of somewhat descriptive, so let's kind of go over it. This is about the international bond market. First things first, is that market big enough to even worry about? The answer turns out to be yes. Overall, roughly 20% of the bond market in the world are international issues. So it's big enough. I mean, as of 2021, it's about $27 trillion, which is pretty big. I mean, if you consider the US national debt is about 37 trillion. I mean, if you get rid of what we owe to things like Social Security and stuff, it's about the size of what US owes to non-governmental entities. Now, we're going to divide the international bonds into two categories. One are called foreign bonds, one euro bonds. A foreign bond is an issue offered by a foreign investors for domestic markets. So if a German company comes in and offers a euro-denominated bonds to U.S. investors, that will be considered a foreign bond. On the other hand, euro bonds are denominated in a particular currency, but they're sold to foreign countries other than the country that issued the denominating currency. So if a Dutch borrower is issuing a dollar-denominated bonds to investors in, I don't know, UK, Switzerland, and Netherlands, that's pretty much it. The currency distribution and type of issuer, roughly half of the international bonds are in US dollar terms, a little bit less in euro terms, maybe 10%, even less, is in pound terms. The rest are kind of get the rest. In terms of nationality and type of issue, as you can see, the biggest issuer is pretty much the United States. It's about 1/5 of the international issue markets, but you know, a lot of developed countries and developing countries issue quite a bit as well. In terms of type of issuer, most of the international bonds are by financial corporations, especially banks issuing international bonds to get long-term capital. Obviously, governments have quite a bit of it. International organizations such as IMF, World Bank, they are also in there, and non-financial corporations as well. Now, in terms of how it is registered, there's a difference between registered bonds and bearer bonds. The nice thing about bearer bonds, where most Euro bonds are bearer bonds, it's who owns the physical form of the bond. They're issued as certificates. If I take a bearer bonds to a bank and say, okay, here's the coupon, they're going to pay it to you. It could be stolen, doesn't matter. Who owns it matters. But if it's registered bonds, even if you have the certificates and you lost the bond certificate, somebody stole it, they cannot be paid because they're not the registered owners. The bearer bonds are pretty important because, I mean, especially if you want anonymity, you're a wealthy US individual, you're keeping your money abroad, and you don't want the US government to know anything about where you're investing it, and you want to have them in bearer bonds, which of course makes money laundering rather easy. You can read about all that stuff. Now, we're more interested in types of instruments. Bonds could be either straight fixed rate. I'm issuing bonds, and every quarter or every 6 months, depending upon the coupon frequency, it pays a fixed amount of coupons. And about 60% or so of, a little bit more than that, maybe 2/3 of the bonds are fixed rate bonds, but quite a bit of them are also of other type, mostly floating rate bonds. Floating rate bonds are more common for uh, non-government issues. So if government of Turkey issues a euro bond, which means they are borrowing in US dollar terms, but the markets that they're issued is not in US, they're more than likely are going to issue it as a fixed rate bond. But if Deutsche Bank issues a bond to finance their long-term operations, more than likely that's going to be a floating rate bond. So some sort of reference, used to be, LIBOR, but maybe these days some sort of uh, short-term reference rate plus a spread. A lot of those fixed rate issues are the so-called Euro midterm uh, notes, which means these are bonds with maturities 3 to 10 years, but the rates are fixed, and they have a fixed maturity and they pay interest on periodic dates. But unlike a regular bond issue, these actually could be brought to market on kind of a staggered basis. The regular bond issue, the entire issue is issued once, but these guys can bring into the market later. They can add to it. And since it's flexible, it's kind of pretty attractive to issuers. I may get authorization to issue $10 billion of bonds, but I don't have to issue them all right now. So later on, I could simply extend the issue.